Welcome back to the Daily Crypto Roundup, the show that cuts through all the noise and gives you the real picture of what's happening across the markets. It's been another busy 24 hours in the crypto world. We've had major shifts in sentiment, some surprising data points, and a few stories today that you absolutely need to pay attention to going into the rest of the week. We're going to break all of that down, but before we dive in, let's get the housekeeping out of the way because today has been a bit special. We've absolutely smashed our Christmas goal. We hit the 205-star rating target faster than we ever expected, and as of this morning, we're sitting at 202. That's genuinely blown us away. The support, the comments, the messages from listeners, it all means a lot, and we want to say thank you. Tonight we'll be replying directly to comments and picking the two listeners who are each getting 50 XRP. Keep an eye on your notifications, because if we don't get a reply within 3 days, we'll move the prize to someone else. And just so nobody feels like they've missed out, we want to make it clear that those two won't be the only winners. The response has been unbelievable, so we're going to do more giveaways leading up to Christmas. We'll explain exactly how that's going to work tomorrow, so stay tuned. Right, let's get into today's market picture, starting with the top 10 coins, which have finally settled after what feels like a week of constant volatility. Bitcoin is holding around $86,420, which is solid considering the macro pressure we've been under. It's not pumping, but it's finally showing some stability. And honestly, that's exactly what the market needed. Ethereum's around $2,922, still stuck under that $3,000 psychological level, but looking far healthier than it did 2 days ago. XRP's sitting at $2.05, steady and quiet. BNB continues to surprise people at around $845. Still one of the strongest performers across all major caps this year. Solana's holding above $135, which again shows how much stronger Sol has become structurally. These dips just aren't sending it into a free fall anymore. Tron's at 27 cents, Dogecoin's around 15 cents, Cardano's sitting at 43 cents, Litecoin is approximately $85, and Bitcoin Cash is holding around $550. So overall, the market isn't screaming bullish, but it's showing that buyers are willing to step in again, especially at key support levels, and that's exactly what ties into our first big story of the day. This morning's headline came from the ongoing ETF flows, and for the third day in a row, the US spot Bitcoin ETFs have posted net outflows. Nothing catastrophic, but enough to make people stop and look twice. At the same time, the Hong Kong ETFs, which were previously offsetting a lot of the negative US flows, also slowed down considerably. That combination created the little wobble we saw during the early session, and for a moment it looked like we were going to repeat last week's pattern of the market bleeding out midday. But something unusual happened. Bitcoin steadied itself. Normally, 3 consecutive days of outflows would be enough to send BTC into the low 80s or even 83, but instead, the selling pressure hit an invisible floor. Analysts are pointing to 2 key things here. First, the sell-side liquidity is extremely thin this week. There just isn't enough volume to push the market dramatically in either direction. But second, and this is more important, the fear that we saw last week has evaporated. Traders aren't running for the exits anymore. They're watching, they're waiting, and they're picking their spots. That brings us straight onto our second story, which ties perfectly into why the market stabilized so quickly today. A number of well-known analysts have pointed out that several short-term metrics are finally turning in crypto's favor. Funding rates have cooled. Open interest has stabilized. Stablecoin inflows have quietly increased. And the liquidation clusters that caused last week's damage have now been mostly cleared out. Essentially, the leverage that made the market vulnerable has been flushed. And once leverage gets flushed, crypto becomes much harder to push down. One analyst, Noel Atchison, said earlier today that the market looks fragile on the surface, but structurally healthier underneath than people think. And that sums things up perfectly. Another, Mike McGlone, said markets are showing signs of exhaustion on the sell side, which again lines up with what we've been watching on the charts. And probably the most interesting comment came from Alex Kruger, who noted that crypto always bottoms on fear, not on analysis. And the fear we saw last week has simply disappeared. This stabilization is what leads into our third major story today. The quiet but extremely important jump in fresh stablecoin minting. USDC, USDT, and FDUSD have all registered new batches of mints on-chain, which is a classic early indicator that money is preparing to enter the ecosystem. We said this yesterday. You don't get stablecoin minting unless someone is planning something. You don't just mint for the sake of minting. That capital has a purpose, and the timing, coming right after leverage wiped out and after ETFs post mild outflows, tells you that somebody is accumulating firepower. We are going to take a quick break here. Stay with us, we will be right back in a moment.
Avoiding your unfinished home projects because you're not sure where to start? Thumbtack knows homes, so you don't have to. Don't know the difference between matte paint finish and satin? Or what that clunking sound from your dryer is? With Thumbtack, you don't have to be a home pro. You just have to hire one. You can hire top-rated pros, see price estimates, and read reviews all on the app. Download Thumbtack today.
What can 160 years of experience teach you about the future? When it comes to protecting what matters, Pacific Life provides life insurance, retirement income, and employee benefits for people and businesses building a more confident tomorrow. Strategies rooted in strength and backed by experience. Ask a financial professional how Pacific Life can help you today. Pacific Life Insurance Company, Omaha, Nebraska, and in New York. Pacific Life and Annuity, Phoenix, Arizona.
And we're back. Now, before the break, we were talking about the surge in fresh stablecoin minting. And this really is one of the most overlooked signals in crypto right now. Everyone focuses on ETFs, funding rates, meme coins, whatever's trending. But stablecoin inflows are one of the purest indicators of future intent. And the fact that we're seeing new mints from all three major issuers, Tether, Circle, and FDUSD, tells us something very important. Liquidity is quietly preparing to move. You've heard us say this before. Stablecoins move first, prices move second, narratives move third. We're currently at stage 1. Think about how the market behaved after last week. Everyone was panicking. Social media was filled with, "Is Bitcoin going to 70,000? Charts. People were posting liquidation screenshots, and the usual fear cycle was kicking in. But while retail panicked, someone out there was minting stablecoins. That's not coincidence. That's positioning. And here's where this lines up perfectly with our next story, the one we've been watching closely since yesterday. The massive 1.7 billion options bet on Bitcoin hitting above 100K, but not reaching new all-time highs. Now normally, we wouldn't spend too much time talking about single positions, because futures and options bets get placed all the time. But this one is different. First, the size. $1.7 billion is not some degenerate gamble, it's institutional money. Second, the structure. It's not a moonshot bet on 150,000 or 200,000. It's a calculated position on Bitcoin grinding its way above 100,000, but stalling before the 120 to 125,000 range. That's exactly the kind of bet someone makes when they expect the market to recover, stabilize, and then enter a slow, steady rally instead of an explosive one. And third, the timing. This option structure was placed right after the ETF outflows started and before the stablecoin mints began. That's someone who believes the weakness was temporary. Someone who knows the market structure is healthier than it looks. Someone who expects liquidity to return. It also ties directly into the macro conversation happening across the entire financial world right now. The fact that inflation data surprised on the downside again. US PPI came in softer than expected, which immediately changed the way traders are looking at the next Fed meeting. Now, does that mean Powell is going to cut rates next month? No. But it does mean the pressure for further hikes is basically gone. And the moment markets realize there won't be further tightening, risk assets always breathe. That's why Bitcoin steadied today. That's why Ethereum stabilized. That's why altcoins stopped bleeding. And that's why the funding rates reset is such a powerful shift. Because funding rates are the heartbeat of trader sentiment. When funding gets overheated, markets collapse. When funding resets, markets prepare for the next move. One trader we follow, Raphael Schulzekraft, the co-founder of Glassnode, put it perfectly earlier today. He said the market looks remarkably close to a reaccumulation phase, which historically is the part of the cycle where smart money loads up while retail is still licking its wounds. And you can actually see that on-chain. The number of new wallets accumulating between 0.1 and 1 BTC is rising again, even after last week's correction. Miners aren't selling. Long-term holders aren't selling. and the number of wallets holding over 10 BTC just hit another monthly high. That's not fear. That's confidence. But the most interesting thing to come out of today's data actually wasn't about Bitcoin. It was about the derivatives market as a whole. CME, the Chicago Mercantile Exchange, just hit a record level of crypto trading volume. And this is extremely important because CME volume is almost entirely institutional. You don't get random retail traders messing around on CME futures. It's hedge funds, market makers, proprietary trading desks, algorithmic traders, and institutional liquidity providers. So when CME hits record volumes, especially during a downturn, it tells you that professional money is very active right now. Now that doesn't automatically mean they're buying. Some are hedging, some are shorting, some are delta neutral. But it does mean they're paying attention. And the moment institutions start paying attention during a dip, it usually means they're preparing for a reversal. CME volume almost always spikes before a major move. It's like a pressure gauge. Now let's bring this all together before we move on to the final story of the day. Because there's a theme running through every single data point. The market is calmer than it looks. ETFs had outflows, yet Bitcoin steadied. Stablecoins are being minted. Funding is cooling. CME volume is up. Analysts are spotting recovery signals. And traders are no longer talking about 70K or 65K. They're talking about sideways action, consolidation, and accumulation. And this is where we tie it back to what we told listeners last week. Crypto was never going to recover until leverage got flushed. You can't run a rally when everyone's overexposed on 20x longs. You need resets. You need cooling. You need a clean slate. That's exactly what the market has now. And the fact that it's happening right as stablecoins are being minted, analysts are identifying recovery signals, CME volume is surging, and institutional options bets are positioning for 100,000. Well, you couldn't script a better setup for early December. And that brings us perfectly onto the last piece of today's picture, the leverage story that's been bubbling beneath the surface all week. Because while everyone has been focused on ETF flows, inflation data, and all the noise around Bitcoin's pullback, the liquidation wave that hit the market has quietly done more good than harm. Over $180 million in long positions were wiped out, and instead of triggering a deeper collapse, the market absorbed it. That's important. It tells you that the foundation underneath the market is stronger than it looked last week. When leverage gets cleared and price refuses to fall, it usually means structural buyers are sitting underneath, buying in size, absorbing the downforce, and positioning for the next move up. And that's exactly why today's conditions feel different. You don't have that sense of panic, that sense of a cliff edge, that sense of one more bad candle and everything falls apart. Instead, you've got something calmer, more measured, more deliberate. Bitcoin is holding above key levels, Ethereum is showing stability, Solana isn't breaking down, and altcoins are quietly preparing for rotation. This is the kind of behavior you typically see before a market flips from defensive to opportunistic. It also reinforces something we've been saying for the past week. The market doesn't need a big pump right now. It needs consistency. It needs confidence. It needs a few days where nothing dramatic happens. No huge red candles. No liquidation cascades. No macro surprises. Just steady, boring, sideways movement. That's where bottoms form. That's where accumulation starts. And that's where sentiment resets. Even the fear narrative is fading. Social media is quieter. Panic posts have slowed. Analysts aren't calling for disaster anymore. Instead, they're talking about the mechanics of recovery, funding resets, liquidity injections, stablecoin flows, and structural accumulation. Those conversations don't happen during downtrends. They happen at turning points. And if you're trying to get a sense of where the next real move might come from, the answer is liquidity. Stablecoin mints don't lie. CME futures activity doesn't lie. And large, multi-billion-dollar options positions definitely don't lie. Somebody out there is preparing for the next phase of the cycle. And the timing, right at the end of November heading into one of the strongest seasonal periods for crypto, could not be more interesting. So as we wrap up today's episode, the message is simple. The market looks calmer, cleaner, and more prepared than it did even a few days ago. We're not out of the woods yet, But we're no longer in that fear-driven, liquidation-heavy environment. Instead, we're in something that looks a lot more like reaccumulation. And if the structural signals continue into next week, this may end up being remembered as the point where the market quietly began its next shift. As always, thank you for listening, thank you for the support, and thank you again for getting us over 200 5-star ratings. Keep an eye on your notifications tonight if you entered the giveaway. We'll be announcing the 2 winners shortly, and like we said earlier, they won't be the only winners before Christmas. We'll explain what's coming next on tomorrow's show. Drop your thoughts in the comments, follow the show for the next update, and as always, we will see you at the top.